Yeah. Oh, okay, I fixed the audio now. All right. Well, probably no one's watching YouTube by this point, but whatever. All right. Amazon and Reddit. All right, Amazon and Reddit. Let me check Amazon chart. Oh, sorry, 1 second here. Answering a text. All right. Amazon. Some setups you're watching. Yeah, typical. I mean, with the tariff stuff, there's really no way to, not much we can do there, right? So I think if you're that concerned, either size smaller or skip it. But Amazon right now, I think I looked at this yesterday. Did I have this 240, whatever? I don't know when I drew this range, but this range that goes almost to 240, we bounced basically off that, not to the tick, but close enough. We're pretty close there. Uh, yeah, when I'll explain ARM in a second. One moment. Yeah, shoot, that's so annoying. Okay, so yeah, the YouTube video for this is gonna be useless because I forgot the audio. Okay, anyways, yeah, so Amazon off 240, 237 looks pretty good. Looks like we already bounced there off 240 today. Amazon does have a lot of resistance if we're talking about continuation upside with the 245 and 250. So yeah, I mean, I don't. I mean, to me, it's probably not like it doesn't have like a huge range for expansion upwards, but let me think here. Yeah, I guess if we claim 245, that'd be pretty bullish. Sort of go back to that block where it was consolidating above at 245 to 248 and see if we can get further push out of there. But yeah, Amazon, yeah, I don't know if I'd be. The range just looks a bit limited to upside for me. Yeah. Unless you're viewing something else typical. Actually, yeah, I'll let you off 337. Oh, okay, so you're saying wait for further downside. Yeah, I think that I'd be more comfortable with. Um, Looks like I have a level already marked off at 238.7, so a little bit above. Yeah, so if you're looking at this wick back from December, like December 1st or 2nd, we do have a pretty strong level here around 238-ish. So yeah, I think that's 237.5. I don't mind that much as much. But yeah, in terms of yeah, if you wait for that level, I think that could give pretty strong reaction. Honestly, yeah, why not? I'll just set this up too. Okay, Reddit. Hmm. So let me see here on Reddit. 260. So Reddit looks like it might break out here above 260. Just because it's already tested that level a couple times. So break retest 260 wouldn't be bad. Does definitely look like that bounce off 240 was the best play at the end of last week. On Friday when we worked pretty hard on under it. Or even Monday. Like Monday looks like we opened, pumped, dropped, tapped nearish that level, and then we're bumping overnight and into today. So it's probably the true reversal was there. But yeah, I guess now that we have reversed, it does look like we have a lot of floors to catch price, right? At 255, 250, even 260. I'd probably prefer if it gains some volume. But that would really be like, okay, if we break out of sort of those levels we were hovering at last week, break out and just come retest them and then really push higher towards 275. But yeah, Reddit doesn't look bad. I do think it's probably a play that yesterday would have been the best entry off 240. But we do have some pretty good floors if in terms of if you're trying to gauge and get some kind of bounce into 265, 270-ish into later week. So MSTR I did do. Oh, that's an indicator. Oh, wait, sorry. So MSTR I did do, I just said here, like, I mean, it's not really much of a reversal to play here. Like, it already took off. You could try the reversal around 180. Um, doesn't look too bad. Like, we do have good confluence across Gex and Vex. We do have a decent amount of room, right? If we checked 180, push back down into 175. I don't trade MSTR myself. I mean, I don't know. Last time I tried it was maybe 8, 9 months ago, a year ago. Who knows? But yeah, I think the only thing really left to do on MSTR is say, all right, if we can wait for 180, um, get some kind of reversal there. But yeah, MSTR is usually a tricky ticker to get right. All right. So going in order here, win. So looking at ARM. Oh yeah. So ARM, I had said. So actually ARM, I traded today, mismanaged it. Is I traded pretty early in the morning. Like I typically don't. I don't know why. I don't really have a reason. I just felt like it. It did pump like straight out the gate, and I just didn't sell. I think I just forgot to place the limit sell. Like I didn't think it would move that rapidly. I was in a call, and then by the time I got out, it was actually already back to break even, and then went negative, right? Um, so at the time, the setup on ARM was okay. We have a 109 and 110 trampoline setup or a reverse rug. So it was like, okay, setup looks quite good. We had pretty major volume up there towards 120. So that was my thesis on ARM. And we have these lows sort of from last week where we're catching that bounce off of right around 109, 110. It did later sell off pretty hard with the overall market, right? And we saw pretty massive growth of that 100 node, right? So that was probably the big concern where likely growing Gex a lot, but also on Vex, right? So on Vex it came in huge and now is, even to the upside. So at that point ARM kind of fell apart. Um like it did much lower, so it's sort of not sort of, but definitely under sort of what definitely under what my thesis was originally when I looked at this, I believe last night. Yeah, it could have something to do with TSMER. Um, but I think like the bigger reason it sold off pretty hard is just like overall market was selling off pretty hard, right? So it's you know for as strong of a setup, a ticker has, um, for it to for it to fully oppose what's going on in the indexes is always a bit tricky, right? So many times, even if we have very bullish or very bearish setups, if the indexes are going against, then you'll have issues with some of these individual trades, right? So for that reason, like whenever charting or trying to find setups, it's always good to sort of leave a few bearish setups in in your pocket for that. Okay, so that was Reddit, Amazon. Yeah, no problem. Typical. Uh, okay. Anything else that I can look through? Otherwise, actually, who was it that asked about SPX? JPen maybe? Where are you still here? Oh, he left. Oh no, he is here. Bank of America. Yeah. So yeah, what I may do, JPen, is go through a few more of these, and then we can look at SPX, CLSK. Oh, that's sorry. So CLSK, I'll chart it and look at it, but I think glitch is already up like 50% on that, right? So that play's probably already gone. Bank of America has earnings. You wanted to me look what? Winners? What's up, man? Winners in here trolling. Woke up. Wait, Winners, are you not East Coast? What time zone are you? Central? Bank of America. I don't know if this is even worth talking about, right? Like this has earnings in the morning. Yeah, this has earnings before market open. There's nothing we can do anymore. What I, just let the earnings come out, see how the maps reshuffle. But there's not much point in talking about Bank of America. I mean, I don't know. If I had to guess, I guess most of the volume this week is pointing upwards. The weird part is we're seeing pretty good volume downwards over the next couple weeks. So actually, Bank of America, if we get a bullish earnings, I might short it, especially if we come hit this 57.5 node, right, and we double top sort of on a more macro time frame. I may short Bank of America. But again, I mean, for us to know what's gonna happen in earnings, almost impossible. So I wouldn't really be too focused on this one. But this 52.5 and this 50 node for 1 week and 2 weeks out do look pretty good in terms of like a staircase downwards. We have 56 next week and 53, 52.5 next week. So I mean, yeah, especially if we get a bullish earnings, and then that can sort of maybe give us an entry point there. But yeah, right now, Bank of America, I don't. Let's just see what happens tomorrow and how the maps reshuffle, and then we can sort of take another look at it and see what happens. JPM wasn't great. Bank of America, oh, well, JPM's been selling off pretty hard, right? I think had super hard sell off today, maybe yesterday as well. Okay, CLSK. Oh, okay, you're in CLSK. Okay, 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 okay. Okay, thanks, Odasser. Yeah, I get concerned. A lot of times people sort of ask to chart tickers they've seen mentioned in the server, and like it's pretty severe chases. But okay, if you're already in it, then that's pretty good. Yeah, big thing with CLSK right now actually is that we're at this pretty key level, like 12.8, 13-ish. Um, I do know Bitcoin's running overnight, so and it looks like CLSK is also running overnight a bit. So a lot of this will depend as well, just sort of on how Bitcoin continues or not overnight and into the morning. But CLSK was running into this reg setup at 13, 13.5. If we're able to break, so actually this 13.5 aligns with this consolidation block up here, right? So sort of like the lower range that we formed. This was what, back at the beginning of December. So if we break this 12.8, 13-ish level, I would at least expect it to continue towards 13.5. But that rug pull is a bit concerning. So I mean, probably just I would scale runners or sort of scale big portion of position, leave runners. But if we're able to break this 12.8, 13 and hold, then there's an argument for holding a bit longer and saying, okay, maybe we break through that 13.5 level and then push towards 15, which would be the top end of that range of consolidation from. Please tell me it'll go 50. I mean, there's no guarantees, but um, yeah, what I'd be most focused on is like how's it perform at this 12.8 to 12.9 level. Those are pretty strong support resistance, and if we're able to break that, continue upwards, then that's probably a pretty bullish sign on CLSK. All right. Okay, so that's CLSK. Now we can do what? JPM. No, I think you're just saying that was an example. WMB. What the heck is WMB? Wow, that's some pretty heavy downside volume on WMB. Williams Company. What does this company do? Yeah, we do have pretty strong downside pull on VEX. GEX as well has. I, I guess what technically yes, this is a rug pull. The 60 node is super soft, right? So at this point, I'd really just be saying this is a rejection of the 61 node, not really like a full rug pull. Just because, I mean, yeah, like the 60 node is 1/10 of 61, so I'm just not looking at it as exerting much influence. But definitely like a rejection of 61, pushing down, and then like we have these very strong VEX nodes. Those look pretty positive. Um, those VEX nodes tailed off today. Huh. So we ended the day like 6,000. So even 10 to 16 total. I guess it just shrank off a bit. Yeah, so one thing there is like if we continue seeing this shrink off in volume at 55 and 50 nodes, then as for like how extended of a move, then I'd be a bit more concerned. The big issue with WMB is I guess we have this support here, this resistance. That might be what we can say we're playing. It's very here, I don't mind. Um, yeah, for WMB. But I will say I haven't traded this before, so in terms of like the spreads and all of that and the IV, I really I don't have much insights into how WMB will, how we can expect some of that movement and how the options will perform. Yeah. Good night. Typical energy company, Natty Gas. Okay. Yeah, I don't know. I mean, this energy stuff has been big in the news. Typically, when I start seeing a lot of stuff in the news, I actually avoid the whole sector, like those stickers. But again, that's just me. Zscaler, sure, I can check it out. Yeah, let me go look at that win. Two six. Yeah. So a couple things. Who mentioned this? When? Yeah. So a couple things. I would highly doubt we see 260, right? Not even just from like obviously the VEX shows it's there, right? That's what we're looking at. That's sort of what, brought your attention to it. Um, $40 move though on 3 days left is just very unlikely. So, also remember sometimes these OPEX nodes taken well in advance. And sometimes their positions they can be sort of caught off guard, not off guard, but like maybe like caught a bit off size if that makes sense. Where they're taking the position a full month or even more in advance. So then there's a lot of stuff that can happen in that month leading up to it, and then sometimes we do end up pretty distant from those large volume positions that were taken. On ZS, I'd actually be a lot more interested if you're noticing that two on the VEX, right? If we're seeing that 220, 230, so 220 this week, 230 next week, and then 250 2 weeks from now. So we're seeing there's like a slight stair step upwards actually. Um, so I'm actually more curious on that. So probably as for an entry, that'd probably be like we'd have to break and hold 220, just because there's not really much down to the downside in case we dip. But yeah, Zscaler maybe for long term doesn't look bad actually, and I want to look. Let me look at the macro chart before the daily and weekly before I say anything else. Holy crap! Yeah, Zscaler is at a really good spot actually in terms of the chart. Like it's held as resistance like 5 times in the past. Yeah, I don't mind this at all. It's even support all the way back here. It's also a fib level if you start charting this out. So I mean, yeah, 260 this week. Yeah, that's absolutely not like within the realm of reason. But yeah, we're bouncing off the 0.707 fib. This previous strong resistance now flipped to support. It looks like. We do have a pretty nice staircase on VEX. So honestly, yeah, Zscaler, I don't mind. Well, you could even no. I mean, this is pretty far out. It's like a month till earnings. You could, in theory, load like a monthly contract and see if you can even catch some of the monthly, like the earnings run up later on. But barely, like purely based off heat maps, like I would say this is more of like a 2 week kind of play towards the end of January. And you're also playing this very strong level on the chart. So yeah, honestly, Zscaler, I don't mind this at all. This looks pretty good. Even though yeah, I recognize the map this week looks crazy good for like the map looks this week is pretty crazy, but like what I'd be more focused on is like okay, either play the bounce directly off the support resistance. If you want to be a bit safer, I guess you could wait and see like do we break and hold 220. Um, I probably wouldn't even wait for that honestly. Like just based on the higher time frame charting, that 216ish, 217ish level looks quite good on Zscaler. Zscaler is also from Agent Zero. Swing 2 to 4 weeks to 232. Okay, yeah, I mean even better. Again, the Agent Zero. I'm still trying to. I have limited access to it, so I'm trying to see like how it's weighting a lot of these trades and sort of what it's basing it off of. Um, yeah, doesn't hurt to have that confluence. OPEX max pain. Um, I don't know protons. I typically don't look at max pain much, so I don't. I guess I haven't tracked it enough for me to be able to know if it's usable as a confluence or not. I'm trying to think if there's. I remember there was one user I chatted with who did track max pain, but I don't remember their. I can't remember their username. This is annoying. Who was it? Yeah, sorry, I'm trying to think of who they were, but I don't remember. That would be something I'd be interested to ask them. Okay, so that was Zscaler. Okay, I think that was the last ticker. Yeah, Pro I'd have to look into that. Um, Winners, I don't know if you know. Winners also has very good like fundamental. Okay, Winners is trolling. I think Magna's in here, right? Um, Magna, in that case, I don't know if you're listening in. Can you give some insight into Max Payne, at least how you use it? but but yeah, Winners is I would trust Winners with most things. So, um, but yeah, I guess you can probably DM Magna if you want to hear the counter argument. But yeah, Winners generally has very good like fundamental understanding of the market. So I take his word pretty highly for anything macro and anything sort of on the mechanics. I'll pay close attention to some of the tips he gives. Okay, Lerold. Double pica means when below and above. Okay, so when we have double positive. Lerold, is there a specific example here, or you're just saying in general? Like, is this index, individual? Just a general question there. End of day SPX this afternoon. Yeah, I mean, I guess let's just go look. I think everyone sort of, we already went through some of the tickers for everyone. And I think JPAN is still here, maybe? Yeah, JPAN's still here, so I think we're still gonna do some of the SPX. We can go take a look. Um, I'll be honest, I think SPX, let me think here. I think the clearest play I saw was this initial reversal at around 11. Now, I do think I bias my index trading towards the morning window, like from 10 a.m. to noon. So a lot of times I'll just stop looking at it in the afternoon. So we can still take a look though and just see. But I won't be too informed just because I haven't seen some of this yet. So yeah, do you know what time it was at? Magna, I can give you access to talk if you want. If you want to give a quick explanation to how you use Max Payne, if you're comfortable doing that for everyone. How do I do this? Did you get an invitation there? Winners, if you want invitation as well, feel free. You guys can duke it out. Magna, oh yeah. I'll mute and I'll let you sort of explain it for a bit. Do you want to share your screen, Magna, or do you think verbally is enough for you to explain? Got it. I'll go mute. Let you have at it. Were you talking? Were you talking about Friday or Thursday? Because I think six. I think we held below 690 most of Thursday, and Friday was the day we dipped into 690 and bounced pretty hard. But I guess you could also be talking about Wednesday when we first sold off into 690. Okay. Okay, so Friday near open. So here, Friday. Okay. Then it's Monday. This Monday. Mm-hmm. Yep.
very much a function of the market. And there's a lot of money being uh, used through dark pools. So, in my opinion, if you're able to get some dark pool prints as well and add them to your chart, they are very important because whereas I would say your VEX, like a lot of people are prepping their trades based off of VEX or GEX for the following dates that are upcoming. A lot of selling happens on dark pools because if you take into account seller psychology, you do not want to let retail know that you're going to sell something off, especially in a distribution setting. It's okay to have like buys in dark pools, but it's almost never okay to show your sells in a dark pool because most of the money that Wall Street will get will be from buys, at least the commissions from the buys. They don't really care what you're buying, the price that you're buying. But if there comes a situation where their books are offset, or they pose a risk, and they do have to get rid of some liabilities, then a lot of that will probably happen through dark pools, and then you'll get some sort of news event that justifies the move. And then what that would look like on your heat seeker would be a really large intraday shuffle that kind of just wipes out all your hypothesis or wipes out your like what your plan is. So you just have to act accordance. Like no one can really know when you're going to have a macro event or a market destabilizing event, but usually they still adhere to general like market structures. So of course you have insider trading. Insider trading usually shows up before an event, and then so you'll have some sort of topping structure or bearish structure that is like a rollover, and then those insiders basically start the change of structure. And it's just if you're going to go into a large selling event, just normal technical analysis will usually predate the reaction to the event. So, and this is true for most things, like even like earnings. So, like sometimes you'll see on heat seeker like predicts the earnings results, right? But on a fundamental level or a technical level, usually your the result of your earnings is cognizant of whether institutions have either accumulated or distributed prior to the earnings report, which is why sometimes people like they'll come with a narrative that it ran too much before earnings, or they're not happy, right? It's like not really that. It's just based off of premium positioning and where the institutional holders want the price to go. That's why I think for the past couple of years, you'll see a big disconnection between something like discounted cash flow pricing, or any of these models that they use to price like markets fairly. They just get thrown out the window with some sort of narrative that gets put out to justify the price action, when in reality it's either they loaded or they sold off, and then they'll find some reason to sell it off or to buy it up or to go flat, right? Or if not, if anything, they'll just go flat just to crush IV and then continue whatever move they intend. So and all that heat seeker does is kind of provide you the price without needing to think about all that or chart or take a look at a volume analysis and see where institutional holders are versus where the chart is for the earnings report. So you can manually do it, but Glitch obviously has made everything easy for everybody. So just keep doing what you're doing. I just wanted to give you guys a little bit of a education lesson since you're stuck doing paperwork, and I figured I'd take a small break. But yeah, if you guys have any other questions, or if you guys have any questions after this, feel free to either DM me or just go to the trading chat. I'm going to turn this back over since I feel like I've taken too much time. I'll turn this back over.
No, you're good, man. I think a lot of people appreciate it. Actually, a couple questions. Magna Winners has a question for you in the chat if you're still there and willing. If not, otherwise you can do it over text. Uh,
Oh, I see. So the question is whether SPY is in distribution.
mm-hmm.
So it's somewhat difficult to determine if an indice is specifically in distribution, especially if there's anomalies in the subsectors that compose the indices. So yes, of course, any strong buying channel is usually an easy way to identify a markup phase, which is the start of any distribution phase. So, for example, if you look at Roblox as a ticker, that's a very easy distribution that started since I guess 2024. It basically has a topping pattern where you basically go into a consolidation zone. So yes, SPY has been in somewhat of a consolidation zone, and so has the global liquidity index, which was actually a precursor to the 2022 drop or 2021 drop, whatever the case is. So what I typically do is if I want to see if a indice is in distribution, then what I would do is check if I'll check the biggest weightings. So when the indice sells off, you'll see that a lot of the bigger ticker names have the same similar structure to like S&P and QQQ, like the Mag 7. So then you'll have to say, okay, those showing signs of distribution. And it is very possible because we see that NVIDIA is very much taking its time horizontally. Microsoft did execute its distributive top. That happened basically perfectly. So Microsoft did confirm distribution. That's why that's why I had Microsoft calls at some point, was because when you're on your selling leg, you basically have these bounces where they have to raise liquidity to bring it back down further. And weakness from today just kind of confirms that. Let me go and see the other Mag 7 stocks. Tesla's very interesting. Tesla has a structure that's very coincides with global liquidity as well. if you did create, you are struggling at the 48 and change, maybe 490 around there, that zone, you haven't broken out. And if you zoom out on like on a weekly, um, you basically have been in a consolidation zone, which is a precursor to a distributive move. The fact that you haven't broken out in weeks is not great. Um, you, so it is still possible. Of course, that's the case. You do want to make sure that all your biggest tickers that comprise the indice show at least some sort of consolidation and breakdown. Um, my problem with calling a specific distribution just now or right now is actually the equal weights. So your equal weight is still breaking out and still making new highs, um, which uh, would mean that there's not really a push to mark everything down. Typically, if you are going to have some sort of big selling event that they want to distribute, when they want to have go to like from phase C to like a phase D, phase E, um, you would you would want each ticker to be somewhat aligned, but that's not necessarily true because of Microsoft. It used to be that most of the tickers would align before a distributive move on an indice, but nowadays it looks like certain tickers are distributing before others, just like Meta. So Meta did have a distributive top, which is why people are trying to see, people may be confused why it's having weakness. It doesn't mean that it will like go down forever. It just means that sellers have, got rid of their bags. They're looking for buyers at a lower level. But um, again, typically, if you're having issues with global liquidity, you can even see it in margin statistics. Something's slowing down the buying mechanism in the market, um, which is why you probably didn't have a Santa rally. Everybody's calling for a Santa rally. It's really hard for anybody to call anything. There's no real bearish catalyst to sell anything off, but the market is kind of just really grinding on lower volume, and it feels like you do need a like lower volume even to move up. So the market's not necessarily strong right now, I would say in aggregate, but across the board, yes, there are tickers that have undergone distribution or are in a like further along. Meanwhile, you have some that are not exhibiting distribution at all, um, which then you can't really. I wouldn't say you wouldn't call. I don't think you can call SPY being in distribution just yet, but it is possible. Um, because if global liquidity is flatlining, which it is, that you do have the conditions for a distributive top. So uh, I I don't necessarily um, I wouldn't jump the gun to say something's in distribution. Um, the easiest way to instead of having to study all this Wyckoff concepts about up thrusts and automatic rallies, etc. Usually these distribution um, waves or segments are just consolidation zones. Like if you just simplify it, and if you see a very high volume shelf where there's a clear support, um, the velocity of distribution usually accelerates at breaking set support. So, like jumping the gun is not necessarily um, even tactical in a distribution setting because you're guessing. You're basically guessing when the support will break. And again, any dealer or anybody who's a seller, they want to have people sell or buy at as high of a price as possible. So there is no incentive to sell the market unless we, we do spend too much time here, and it becomes evident that either there's too low of a interest in buying at these levels. Maybe buyers are just not interested. There's just um, they need lower to be interested, so the money's not flowing into the market, or everybody's on one side of the trade, some to that degree, where they just can't get prices to go higher, and you're just struggling for large periods of time. As long as you keep an uptrend, usually you're safe because um, phase C usually phase C is like they call it a UTAG, which is like a basically the final high before a big distributive wave. But if you just draw a diagonal, it's like if you draw it in a channel, it's just a higher high, just a normal higher high, like any other buying channel. So as long as you're in an uptrend, you don't have to worry about that. What you do have to worry about it is if you study anything like a breaker block, um, any of those like candle breaking structures where you'll have a candle that makes a high, but then you'll have either a set like one or two candles that either engulf or close below your recent peak. That's when you really are in trouble with distribution. And I don't necessarily see it on some of the tickers like Google. Google still shows strong, um, and SPY still making like new highs. But this isn't the structure on SPY isn't what you typically see before a big distributive wave. Um, Again, it does have I would call it the precursor to start to distribute, but unless you're breaking like a key point of control zone, like 678, 680 on there on SPY, um, I really wouldn't worry about or even call for distribution because you're just kind of asking for trouble. Sometimes what would be a C wave is actually just like a more advanced reaccumulation zone, and your C wave actually just all it is a breakout level. So a lot of times Wyckoff analysis is more based off of understanding what your options are and analyzing the price action, but you'll have situations where there's different types of schematics where you'll have like a spring or you won't have a spring, or your phase C like just if it just continuously goes up, that's not really a phase C. It's more than likely that you had a reaccumulation area. So, or sometimes people call it a correction in time. I don't know if you guys heard that phrasing before, where you'll have you'll just go flat, and then you'll build up that liquidity to just bounce and then create another leg up. My only problem that's separate from structure and technicals is that usually you do need liquidity to coincide with a move up. So unless right now the liquidity is in a somewhat bullish structure, but it hasn't necessarily made a new all-time high. Like that, there's a big divergence there where global liquidity is up, but it hasn't made a new all-time high yet. The S&P is making new all-time highs, which is problematic on the internal side. Well, there's many things that are making new all-time highs, IWM, but that's usually more indicative of a skew where many traders are on one side of the boat, yet there isn't necessarily enough cash to turn into derivatives in order to push the market up, and then you just see this kind of slow, grindy action. Um, so, I mean, I think a lot of traders have been waiting for a decent pullback, but we just kind of don't really get it. Um, but yeah, I don't necessarily, I wouldn't even worry about whether the market is in distribution. If you want, you could take a look at VIX and say, hey, the VIX is an accumulation for a breakout. And I mean, the VIX is kind of bullish, but it's not. There's no confirming signals or structures to um, say that that's what's happening. For Bitcoin, I would say be wary about it because Bitcoin did have a really, really nice, almost textbook distribution structure coming from the top that recently happened. Um, so there's only two scenarios that can happen. Either this is a redistribution wave that's happening and you're going to go lower. And typically that happens, there's usually one set. So there'll be one redistribution set, and then you'll make your actual bottom. Um, or this is somewhat, it's moved directly into some sort of accumulation zone, and you are going to make like new all-time highs. But with what I see liquidity-wise, it's probably easier to just redistribute one time and just have maybe some sort of capitulation event possible, then accumulate. Actually, this accumulation zone is really not even it's not even a long time compared to historical accumulation zones before markups. So, for example, you had an accumulation zone that lasted from March of 24 all the way to October of 24 before markup. So that's a period of 7 months, but you've been in this consolidation zone for almost three. So that that typically is not the best sign of being able to make, or at least having enough consolidation to make a new all-time high. So just be wary of that. They do in any distributor structure, they do have to make the a bounce wave to generate enough liquidity to push lower. But no doubt about it, the current short-term structure is bullish on Bitcoin. Well, it's bullish on almost everything, right? So that's why most traders are bullish because the charts say to be bullish, and there hasn't been any sort of negative catalyst. There are like underlying signals where you do have divergences and things aren't matching, relative weakness out of nowhere, stocks that you think would be strong, like Meta, aren't exhibiting that kind of stuff. That's usually an indication of money's money's trying to find a home, but in a way that like there's just like almost too many people allocated right now. So everything's really, really grindy, and then you don't see decent recoveries from tickers that you should be seeing. So like if anybody's been trying to long Netflix recently, trying to long Microsoft recently, trying to long Meta recently, where it would be a like in 2024 it'd be an easy home run, right? Easy home run. Um, and then you're like, why is it taking so long? Well, you've got money that's spread out everywhere, right? Because there's money that's, the gold market cap's huge. So to move gold, that's a lot of money that's being siphoned out of the system to move gold at those prices and silver at those prices. And that's money that's not being allocated to equities. So sometimes you have to have a broader scope of the market to see, where the flow is or where there could be a siphoning of flow. And surely, of course, Bitcoin is oversold, decent buy. Just like I think has a minor bounce or had a minor bounce. A lot of these oversold tickers have had like little minor bounce, like Roblox, etc. So, or at least they're showing signs of minor bounces. But everybody can't be allocated to all tickers all at once. It's just it's not feasible. So something's got to give somewhere, and I think that's a real big clue where I think software as a service this past week it took a huge beating, even though they have decent balance sheets, etc. And I guess the premise that they put was, that every company can make their own software, but in reality, it's not. I don't think that's feasible in practice. So they just, for me, they just scream buy the dip opportunity at some point. But I do think that there is a decent chance that some sort of selling will happen in the near future. So, but there hasn't been a catalyst. So I'm the first one to admit it. And it'll show it'll rear up its head, but I just can't figure it out. There's a lot of short-term solutions like yen carry's been the spreads aren't they're not enough to cause any danger, and they've been able to kind of manipulate the spreads. So that's not going to that might not have it be an issue unless the bonds like the velocity of the interest rate of the yields. And the bonds are like go quickly, like they appreciate quickly. Then that'll get on the table, but right now not really. And surprisingly, the bond auctions that happened at the beginning of the year, they didn't they were decent. So there wasn't really a huge spike in yields due to lack of buyers for bonds. But that could just be a side effect of Powell, so implementing QE. But I don't think his QE is unlimited. I think he's just putting a certain amount on his balance sheets. So we'll got to see. We'll see the bond market here for the rest of the year because there is some bearish catalyst that I don't necessarily know how Trump's going to handle mechanically. So, and a lot of Trump's policies have been unironically aimed towards trying to stabilize the fiscal situation of the U.S. But just as anything challenging, he doesn't want to drop the market. So, we dumped for tariffs last year, but the market doesn't really even they just completely ignore any tariff talk this year. Yeah, he put some of the biggest tax breaks that we've seen ever. So we haven't got to see how much is the deficit on the federal side. So you could just see, once the numbers come out, just like if the deficit's moving at some sort of exponential pace, the bond market may not like that at all. And if we can't, if the bond market breaks, that's it. Really, that'll crash the market in its entirety. So we've just been lucky that the bond market hasn't really. It's been going up, but it hasn't gotten to levels where it would cause a huge sell-off in equities, but it can. So a lot of our debts are subsidized by um, actually the East, and then on top of that, he's instigating situations with the East. So he's had some. He said that anti-tariffs is like pro-China, right? There's a lot of this rhetoric that doesn't necessarily bode well for countries that are trying to buy your bonds. So we don't know how that's going to end up in the future. We can only just now the charts obviously would I would say the charts predict these things, but right now don't try to be a hero and say, hey, the spies and distribution is going to crash and like right now, we don't know. Um, it it can happen. There are things that are um, hard to account for uh, in aggregate. But yeah, I wouldn't count on a distribution situation right now. GX is flat for over a week, no buyers or sellers. Yeah, that coincides with liquidity right now. Global liquidity is flat, and it's possible that global liquidity is correlated with margins too. Margin is flat. Margin use is flat too. So mm, I think your global liquidity peaked in. Let me see SPY here. What day? What day was the highest peak? The highest peak of global liquidity was actually um, in October, and you haven't been able to beat that yet. So the market did, somewhat run after October, but it's we can argue that it's been relatively flat since that. So yeah, I don't I don't know about GEX, but I do know that a lot of people are even on shares, right? A lot of people are sided to the long side, even statistically. So um, there has been statistics about the appreciation of like all the retail that have bought the April low on leverage. So there's a lot of people who still have leveraged long positions that are retail traders that just haven't gotten blown out of their position. And then we haven't had a correction to blow them out of the position. So at most they went flat on one portion at one time, but then it's appreciated since then. So no one's really gotten. Uh, we haven't had a significant sell wave to uh, have retail sell off. So um, I would say neutral should be everybody's bias. So if GEX is flat for a week, then yeah, that should be the case. I mean, we don't know. We don't know what we don't know. So just be wary that you know don't necessarily be of the opinion that the S&P has to appreciate 20% this year. Just statistically, you guys have moved so high, so fast. Usually, you don't have a decent year after moving so much. And recall that since 1985, post this chart a lot, they've been cutting interest rates, which have an effect on multiples. So you don't necessarily have that aggressive expansion, like that multiple expansion that is available well, as much as people who lived back then. So your growth rate may not be as quick without a incident of hyperinflation. So just be wary of that. So yeah, um, yeah, don't take too much what you see on Twitter. I do have there is a good Wycovian that I do listen to. He is of the agreement that there is it is in distribution, and actually global liquidity looks like it's a distribution. If you look at the global liquidity chart, it looks exactly like a distributive chart. So it's possible they're right. And it would be a phase C. At least if I'm looking strictly at the global liquidity chart, it would be a phase C, which would mark a long-term top actually for the indices. So take that for what it's worth. I'm not calling it right now. Things don't necessarily. There's not a catalyst to sell. Um, and if people are saying it's going to happen immediately, I have a very easy case where I can prove that that's incorrect, and that would be United Health. The United Health distribution phase lasted from April of 22 to March of or April of 2025. So it was in a consolidation zone for like 3 years. And so it doesn't necessarily mean that we have to go anywhere at all. We just stay flat, especially with liquidity peaks. So calling a top is too it's degenerate right now. But it is a decent risk to reward to go short currently due to all the unknowns that are in the market. So just because it's just priced so cheap to take a hedge on the market, but I'm strictly about liquidity. So um, if liquidity peaks, I'm usually bearish. If liquidity is expanding, then there's no reason for me to be bearish. It's showing that somewhere there's a money printer turned on, and a lot of the times they'll just use some sort of political phrasing for, hey, we're printing money. So I usually just try to look at the chart for liquidity, and then if I see it expanding, I tend to not to try to take long positions. And then if I see a flat line and I see a margin flat line, then yeah, I've been bearish. I've been very bearish recently. That's that's mainly because I kept looking at margin debt and then positioning, and everything seems extremely skewed to the long side.
We saw Charlie Kirk.
Whereas I know I don't have all the variables for the economy, and I know that Trump is a very volatile person, and even though he likes the market, obviously he made a mistake last year, so it's very easy that somebody somewhere makes a mistake, and then a lot of people are caught offside, especially with people shorting the VIX at a record pace. Any sell-off, the skews tilted towards longing the VIX, vice shorting the S&P, because there's some decent supports on the S&P, but the VIX doesn't necessarily need to move at the same magnitude as the S&P. It can appreciate. It can go up to 60, whatever it has to do to squeeze out the shorts, it will go there. And VIX is relatively cheap versus getting a put on the index. So if anybody is trying to get some short side exposure, I would suggest kind of slowly building VIX long positions to hedge against any of your current longs. But don't 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 be of like, I wouldn't say have a bias this year. Things can go either way. You guys can make a bunch of all-time high on low volume, right? It could be just a very boring market that just crawls up all year, and that's fine. Just I wouldn't expect extreme velocity as in 2023 and 2024, or even 2025. I wouldn't expect something the market to go that fast to the upside. On the upside, just statistically, it's just really, really bad. And yeah, so and if the midterms, if there's a blue wave on the midterms, that could be also really bad for the market too, because usually having like Democrats on one side and then Republicans on the other, they can block each other, and the market likes for everything to be kind of in stasis. Trump has actually been a catalyst for the market, I believe, to the upside. At least that's what they've been using. So any opposition to Trump could be seen to the market as negative. And in a K-shaped economy, most of the people, like most of the quantity of the people, are on the bottom of the K, which is the voting power. And then most of the economic guess rewards kind of drift to the top. And when Trump is definitely a failure to probably majority, not to this community, because obviously you guys are traders, so you guys probably make decent money, but to your Joe Schmo, probably they don't, Trump is a burden on the wallet, and therefore can, they might swap over on the midterms, despite what Twitter may have you believe. Usually, money is one of the biggest factors for voting, and if they see that Republicans are not doing what they need to do to help the everyday people, then they're probably going to vote against the Republicans. And it's just a swap thing. It's not that they have like a Democratic preference, but usually there's a swap whenever one party can't seem to help financially the voting base. So just be wary of that. And especially if there's a down move. A lot of people are like, oh, the market can't sell off before the midterms because then, he wants to bolster the odds of the candidates for the midterms. But I don't know if that's necessarily up to him. So it could be if there is a sell-off, then that even more, right? Even more so, then they'll lose. The Republicans will lose seats. And if the economy persists to be bad for the lower income folk, I would assume that even the presidency will be shifting to Democratic after Trump. So, despite the deporting of immigrants. So, and I don't know what the implications of that would be either. So, because that's a whole other bag of worms I don't want to get into. Um, Anybody else have anything for me? It was very rare for me to talk on here, so you guys usually have to get it while it's good, because then I'll just be elsewhere. Okay. All right, thanks. So I'll turn it over if he's still on the call. But yeah, just if you guys are shy or whatever, you guys want to ask me in a DM or something, just please do so. I'll turn it over.
No, thanks, Magna. Super detailed breakdown. Thanks for that. Um, yeah, guys, there's some you take some time to figure out who is who, but there's some people with some crazy good, like broad market knowledge and perspective. So like Magna, I think Snag is quite good at times. Winners, it's just they tend to be busy, right? So they don't always have time to drop too much knowledge. So it's nice to get some of these moments. So thanks, Magna. Appreciate it. Um, yeah. So I know. Let me see. Who's still left here? Not too many. Is there? Yeah. Look, we're catching some of the early morning Europe crowd now. I think. Pretty sure Shorty is European. Um, any other questions? Yeah. Thanks, winners, for joining. Hope you rest up. Any other questions I can tackle for now? See you, Hazy. Whether it's charting or something more general. I can probably stay up a bit longer if there's a need. What trading view plan do I use? I think I use the minimum, like whatever the minimum premium one is. The only reason I have it is so I can. So I got whatever the minimum one is. I don't remember the name. Like there's standard. I don't know, pro, whatever. DM me and I can probably like show you exactly which one it is. But the reason I have the minimum instead of just free is so I can have live data um, for futures and options. So the crappy thing about TradingView is they make you buy a paid plan in order to access real live data, and the live data ends up being, oh, I don't remember. It's like an add-on too, so I think it's maybe like 5 to 10 a month if I remember correct. Um, oh, I say the live data is probably the bigger concern, Proton. So the workaround around that is you can either use whatever brokerage you have. Like, for example, if you use Webull, just download the application and use their charting application. Um, if this is for an indicator, what indicators do you have? You probably don't need, you don't even need two indicators, honestly, in my opinion. Well, I mean, that depends on your system, but personally, I don't. I guess the only critical indicator I have is one that I use to translate futures levels to index levels. Um, that's all that's the only critical one. Like I have a few other ones that I'm sort of just testing stuff with, but those aren't ones that I really fully use. New to charting, no idea what I'm doing. Fundamentals based. Yeah. Let me see. So I can give a quick breakdown right now, Protons. I think what we can do though is message me after this and I'll sort of I'll give you a few examples of sort of how I'm charting and how I'm seeking some of these key levels, but what we can also do is just I'll give you like quote unquote homework and then sort of you can sort of go through some tickers on your own, chart them up, and send them over, and then I'll give you feedback there. But most charting that if you really want to simplify it, which I keep my stuff pretty simple, Glitch does it as well. Same as John. Like a lot of us in here are quite rudimentary with the charting. Is It's all just going to be horizontal lines, and that's it. Like occasionally some trend lines, but it's mostly just horizontal lines, and that's it. For now, if you want to keep it that simple, you can. So, uh, yeah, send me a message. I mean, I can go over now a little bit if you want. Otherwise, just send me a message and we can. I don't know what time zone you are, so I don't know if it's late for you or not. One second here. Whoa, KRKNF. Is this a ticker? Never heard of this. Microcap. Yeah. Let me see. Okay, so issue here is uh, so for a ticker like this, right? We really have no previous structure to go off of, right? So there's a couple things you can do. I generally just I don't really deal with charting most tickers if they're at all-time highs. What you can do, I know some people use fib extensions, like Fibonacci extensions. So sort of the thinking there would be, okay, you have your, let's say here, right? You have your standard fib maybe here, right? So you say, okay, we pushed upwards, had an expansion, retraced, bounced off the golden pocket. What some people will do is they will chart the extensions. So what those would be, actually, I think I have my fibs reversed. One second, let me change these settings. Otherwise, this is not going to work. So they would chart the extensions. Now the issue is I don't actually know if I have the right extension values. So I think some people use like 1.618 maybe. I don't know if these values are actually correct. But the point here is like, so if I reverse these, right? So we still have the same bounce. So then some people would start charting some of these extensions and then using those as targets, right? I might have to find a link and send it to you because I don't know which extension values are probably like the most critical ones. Like, there's infinite amount that you can write down, but for example, I don't know, this 1.272 coincidentally just lines up pretty well, but I don't know if this is actually the proper one to use. But for any ticker like this, right, where we're pushing into um, essentially any like price levels where we don't have previous structure, it's a bit harder based on pure charting, right? So you're gonna have to go towards I think fib extensions, and there's some people who use standard deviations. Um, I'm trying to remember. There's someone I think it's Bell that might use those. Um, so yeah, protons, and for cases like this when we're pushing all-time high on a ticker, and you're really trying to figure out, okay, now that we've started pushing where somewhere we can expect some resistance. For those, you might want to look into fib extensions, but past that, for like a more general ticker where we do have previous um, structure to go off of, in that case, typically what I'll do is I'll go 4 hour daily, 1 hour, even weekly if you're looking more long term, and then just start looking for, okay, do we have any strong reactions, right? So do we have any strong wicks forming um, in the past, right? So for example, on this ticker, in the past, right, you kind of have this level here at 2.85, right, where we've rejected twice downwards and then we came, broke above, and then we bounced off of it upwards, right? So those are kind of some areas you want to look for is when we have some pretty strong reversals off of levels in both directions, and we have multiple taps, if that makes sense. So also, so for example, another one would be down here towards 1.4, right, where we, uh, nope, not there. So here, right? I can get my mouse there. Yeah, so here. Right where we held us, rejected off of it, broke above, and now we've bounced off of it good 3 times above. So then those are some, that's the general gist of how I'm trying to find some of these levels. But again, these are, it's quite a not simple, but this one has less clutter just because it's really been like, pushing upwards. On a ticker with much more price action in these levels, these are sometimes a bit harder to discern. Hopefully that answers the question, Protons. But yeah, DM me actually, and we can speak a bit more about that. Yeah, awesome. Um, yeah, another thing I'd recommend is like just check any charts that Jewel or myself or Glitch sends out. You'll notice most times we're checking only some key levels there. Okay, yeah, Magna just sent his fibs. So, okay, so it looks like standard fibs, like you have your normal golden pocket, like the 618.707 and the 0.686, 68, no, 786. I think some people have the 812 or something. I don't like, what do I have here? I have the 0.786, 0.707, and 0.618. Um, so yeah, protons, look at the image Magna sent. And so for some of these extensions, you may be looking at 1.72, 1.618, 1.7862, and then onwards. But I think always the 618 is always going to be a big deal. So 1.618 to 0.618 to 618. So like that level, I think carries at almost every interval, if that makes sense. And the 618 is sort of like your classic first golden pocket level. Um, so that's always one, whether it's a retrace or whether it's an extension, that's probably going to be a good one to focus on. Uh, okay. Anything else for anybody? Roughly. Shorty. Oh, I see. So, Shorty, you're essentially saying you're playing mostly only the higher time frame levels. You're doing mostly only the higher time frame levels on the indexes and playing off of those. That can work. I do think you'll probably miss some of the moves just because, I mean, there will always be some high time frame levels, but sometimes a lot of the structure we play off of on indexes, especially, is going to be on lower time frame. So, for example, like, sometimes on a 1 hour support resistance flip, sure, it may come into play on one day, but maybe the next day, if we're a bit more removed from any 1 hour hard time frame structure, what may happen is we're seeing a local double bottom on the 10 minute or 5 minute or something, right? So it's what you're doing will work, shorty. You just may you're probably gonna have quite a few trades sort of slip through, which is fine, right? Like the we're never gonna catch every trade that there is. Um, but yeah, I guess I would have to see how many alerts you're setting, but I would think that probably some days you're not getting tagged on any of your alerts and you're sort of, I guess, just not trading those days, right? Which is fine too as well. Like it's fine to have the rule of okay, um, or maybe just the to be realistic and say, right, okay, I don't have that kind of time to trade and to monitor this stuff throughout the day. So then if it's something where I need to set alerts so I can be more efficient with my time, then that can be a good method to do it. Did that answer you, Shorty? Yeah, so Shorty, absolutely. That system will be works a lot more on the individual side. For indexes, I mean, sadly, it's if you're limited on time, it's going to be a bit trickier. What I recommend is so there's a couple ways you can go about it, right? I think sometimes if you do check around 9:40, 9:50, 10 a.m., sometimes you are able to see some structure already forming for the indexes in terms of you can start to tell sort of where some of those resistance and support levels will form. Um, and start seeing like where some of those nodes correlate across the board and get a rough estimate of what levels you want to happen, like where you're some zones of interest, if that makes sense, right? So sometimes that's some you can see it a bit ahead of time, early morning, right after market open, after some of the initial reshuffles. So you could also just, spend some time there around 9, I don't know, 9:50, 10 a.m., check some of that out, and then set alerts based on levels you see there. But yeah, obviously that's going to require a bit more time commitment during market hours, which seems you're trying to keep that to a minimum, I assume, either to work or who knows, or kids or whatever it may be. Um, the other solution on the index side is like, some people are able to check in small spurts throughout the day, but some people are more deciding like, okay, if I had to pick 1 hour, like one block of time, right? 30 minutes, an hour, hour and a half. What I tell them is I'd probably just be sticking towards that 10 a.m. onwards. So skip like the first 30 minutes, and if you have to like concentrate your efforts to a specific hour or so, what I'd say is just take a look at 10 a.m. and treat that hour as sort of like your one window of the day if that's something you're able to configure. But again, not everyone has that flexibility, but um, some of the most clear moves, in my view, are in the early morning, 10 a.m. to noon. Actually, probably just 10 a.m. to 11:30ish. Um, okay, hopefully that answers your question. And protons, yeah, I would recommend just screenshotting Magnus, Magna's image. Okay, perfect. Just making sure protons. Okay, we'll read up. Yeah, protons probably. Yeah, Magnet's a good point of what you can look into there. Uh, as extra confluence, a lot of times if you plot macro fibs and then look for a more shorter time frame confluence on heat maps, I've seen that work quite well actually in the past. So some people chart fibs on the daily, weekly, I think even all the way to monthly, and then cross-reference with heat maps. And sometimes when they get good alignment there, those trades can go quite well. Those tend to be a bit higher time frame, like you can hold them a bit longer. Uh, okay, any other questions? It's just a few of us left, so I think I may cut it here for tonight and let everyone rest. All right. Yeah, no problem at all, Protons. Thanks for being here the whole time and being active. Um, yeah, thanks to you as well, Magna, helping out with a lot of these questions and sharing some of your knowledge. Um, okay, yeah. So for everyone left, if there's any other thing I can help with, let me know. Otherwise, just DM me, and I'll always help out over text. All right. In that case, I'll cut this live stream for now. All right. Have a good night, everyone.